What up? What up? What up? What up, everybody? Peace and blessings. Welcome to another South Factory Wednesday. All right, so today we're going to be going over some of the best trade setups for the week. So far, it is Wednesday, so we're going to be looking at some top tier trade setups. We'll go over the one with the NQ and also two on gold. Like I took gold this week with some great trades. Yeah, gold had the best setups. I know I normally love my crude oil, but it haven't moved in a while. I'll bring that chart up too. But crude oil wasn't doing it. I had to switch over to gold this week and get some plays, get some waves. All right, so first up, we got the lovely NQ, making do what I do. Like always, I like to go up to the weekly. We're gonna bust down, start from weekly, then bust our way down to the 1 hour chart, then get into the intraday charts as such. That's me. All right. So I'm gonna start off. I always do nothing too crazy. I'm just gonna mark my high low, right? For the week. Keep that universal. Dead, dead. All right. So you see, from the previous week, we slightly pushed up, right? So from here, we already kind of coming back up to this top where we had looked at this little downturn from. So we back at the highs, looking like what can we do? Financials have been running. This is their season for financials run to XLF. They are running for the next 2 months. And after that, December people start looking at those bills a little bit different, right? We got to pay back all that debt. So let's jump down to the 1 hour chart real quick, like. Boom, boom. So we're going to take it from Friday, right? Always pay attention. So I like to mark out the Friday closing price because that's what the auction block gonna start off. Everybody always start auctioning off. They're gonna start buying and selling around the Friday close. So it's very important, the New York Friday close. So I just kind of keep that on the mark. So I'll mark that out. I like to mark out the high and low of Friday too, being that the high was the high of the week for on Friday. I'm just gonna go ahead and let the high of the week represent that Friday high. I'm not keeping it smooth. Now, did you notice on Monday, Sunday market open, but on Monday we trended upwards, putting in a high, right? Taking out the weekly high, like such, and dash that up. Okay. So once we took out the highs, look at this candlestick pattern. I was talking about this yesterday on Tuesday. So the moment they put this pair of orders in, right, it created a rejection block on the 1 hour chart. And you'll see it's not going to happen for no reason. They got up to this point, did a heavy rejection. They don't get here for no reason, right? From there, you'll notice this Monday high now. So we got our high is Monday. Boom. And then where's our low? Right around midnight. Okay, cool. Low. So the thing about this, reason why I do this, because it helps one track your days. It helps you identify the direction of the market and all that good stuff. So that's why I always track the highs and the lows, closing price. They kind of help you understand like what's going on, which way the market is going, understanding your trend. So the next day you can pick it up very quickly and go without trying to overanalyze the charts because last thing we do is overanalyze the charts. All right. So notice Monday was a trending day, the straight trend, upward trend. Right. That's nice. Upward trend on Monday. Go ahead running highs. Great time. Now, what it is, like I told you about the market closes, right? You want to mark out the closing New York price on each day. Okay. Closing price. Reason being is look what happened the next day. Tuesday come around. Guess what? They are not closing above the Monday New York close. So that's already letting you know they refuse to make progress, right? As they get trapped up in this range, again, this is rejection block. We drop down to a lower time frame, you'll see you can kind of pencil it in. So let's drop down to a 15-minute chart real quick. Boom. Now you see the consolidation, right? And that's the range that the market was stuck in. Right there. So once you see that consolidation, especially on the 1 hour chart, reason why I like to start with the 1 hour chart every day, I start with the 1 hour chart because it allows me to see the consolidation. I want to make sure price was there for a significant amount of time, not a couple of minutes. I mean, a couple of hours. In the futures market, hours are like days. So I want to see that consolidation build up in that spot. Also, I want to see like where they failing to break through at it. They cannot get over this, closing price of the previous day. Well, that's letting me know 9 out of 10 are going to close lower than that day. So we're losing momentum to the downside, right? So when you see this breaking down, you see that sharp drop, they came back up. Okay, cool. Right here is our first hint. Hey, when they return back to the highs, this was our pullback. They return back to the highs, they fail to take the other high, right? So as you see the shift here, my lord. Come on now. How about so we had a market structure shift here, right? Price failed to take out new highs. So that's already a failure swing. So if you start paying attention to how price starting to behave, so we have a pivot point here, right? Boom, they took that out. So we got to break the structure. Nice and slow. They doing this on a 15-minute chart, so you already know what time it is. Right? They broke that point. Okay, cool. Now we coming into Tuesday London market. They decided to break out of this channel, the Asian. When they break down London, now they're running highs. Just mean what you put it, right? But you also have another pair of orders right here. There's another rejection block. But it's still operating off the 1 hour block, and it's kind of tightening everything up, right? So as they come up here, you see they get midway through that block. Boom, 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 boom. Price is filling. From there, that's when we get this nice little no look back dump. All right. If you look at all your oscillators, MACD, RSI, you see it failed to get to the highs. Then at this point, it's starting to drift down. You got a nice little crossover on your MACD. That was murder she wrote right there. Already letting you know it's setting up to fail. If you will use, let's say, the simple 34, that's what I like to use. The close below the simple 34 also is a nail in the coffin with momentum driving straight down. You can take that sell. Stop loss at the pivot point high or wherever your risk management let you be at. Choose your risk management. Me personally, I always like the highs. You want to kind of come in. So let's hit the rewind because I don't want to get too many candles. I just want to see, let's get an example of what's a good area where you took advantage of it. Let's drop down to a 1 minute chart. Those typically be better opportunities to find those stops. And once again, here's another pair of orders, right? I like these candlesticks. Every time I see them, I keep my eye on them. Price reverse back up. See here. Now you can see where price is targeting at. And if you say, well, if they break below this low, they're going to come down. So you can do it two ways. You go ahead and put your stop loss there, entry there, stop loss to the high. You can say, man, that's 176 high, right? Or you can say, well, I'm going to catch them like somewhere in this ballpark above that. And just kind of tighten it up as necessary. Maybe you had to put 50 ticks on this or whatever may be the case. Preferably, you want that high. That's the best thing for you. Now, if you want to take the risk down, you can load up on micros. You got your account to support it. Get a necessary stop loss or wait for confirmation. Wait for confirmation. What I mean by that is, as you see this set of candlesticks tumbling down, you can easily say, all right, cool. I see this one reject. I'm gonna wait for the next one to open up, and then my stop loss simply gonna be high right there. 54 ticks is not bad. It's still more than I like the risk, but I still take it because I'm shooting for a very low point. I'm looking for them to at least return back into the range because it's a failed breakout. If they did not get outside of the range, let's go back to the 15-minute chart. The fact that you know it's going to be a false breakout because price is acting like you don't want to close. So you can say, well, what's my lows here, right? I can target this low here. That's a pivot point. I can easily target that and say, hey, they're going to at least come back, test that, or take it out. So that's one target you can use, right? Or if you want, you can always target this low here. You can take the nearest one. Depends on your fancy. You want to say, well, I want to look for them to take that low out. That's 290 ticks. So you're going to risk 54 for 290. That's still a great trade. Or you can say, well, let me get this 435. Or if not, they're going to return back to this low. Here they got put in at the weekly high break, which is 5-1, which it gave you everything. If you really want to be hungry and you want to get in with the higher time frame traders, you can target the Monday low because they're going to want to put in, which will be almost 1,000 ticks. Any of those points that you can stomach to trade would have been great with the right momentum. But the safe trades are the previous lows. You can easily take those, get in and out, and get on with your life, or you can just keep targeting each pivot point because when the price is training down in a certain direction or is actually want to break out and drop, they will go take out these lows every single time. That's why I mark them up. It's rinse and repeat. It doesn't fail, right? So let's get rid of this, and I will show you what I mean by it. Back in the 15 chart, so let's get rid of this. All right. So as you see, they took Monday low, they took Friday low. Great. So now what we have a Tuesday low, we got our Tuesday high. So I'm gonna mark those up. So, that's all I do every day. So I mark my highs, mark my lows in the range, and then I'm also gonna mark my closes, right? The New York close that is very important. That's high. Let's get back up to the hour chart. Let's see this out. All right, so you got Monday, Tuesday closing price right here. All right. So you see, they took out Friday, loaded door range expansion to the downside. Yes, we cracked the high, but it's a failed breakout because we are not closing above the previous week high. So we're not breaking out to the upside, though, just a wick. If the price steady goes down for the rest of the week, well, guess what? We're going to be looking at a bearish candle, not a bullish one, right? And as you kind of got a glimpse of that from the weekly chart, but we'll revisit that. So you look, took Monday low, Friday low, right? Now we taking out Tuesday low. Today, we already took Tuesday low out. We had the little consolidation right above Tuesday close, but eventually we found our way down there 1 hour. It was 9 o'clock hour. Price to straight drop. We'll go back down to the 15-minute chart and just kind of dissect that real quick and get over it. So once again, you have consolidation from your Asian market to your London right up in here, right? Then as you're coming into the 7 o'clock hour, which is the start of the New York market, you get a little more action, but you see price is steady shifting downwards, right? So as you see, price steady and fell to make new highs, they get a little sweep on liquidity right there. And then boom, back into this 3 candlestick order block. Right? As soon as you get in there, get a little bit of panic, but you would have took that sell at the midpoint high over there. That was a nice setup for the day too. You're trading NQ. I know my NQ fanatics, y'all love this. They'll put 64 ticks on risk. Target Tuesday low for 79. You could have got in and got out with your life on 2 candles. So technically, you should have been in that trade 30 minutes. You would have got your 400 ticks. Me personally, I've been right above it. That would have been nice. Get on here, get that, get out, get on with your life. Because tomorrow we should be looking for some type of reversal or trade back into the trend for the continuation on Friday. That's why you see prices back in this range and it's trying to consolidate. If it don't shift back up to rebalance some price action, it may just, continue down, which is not going to be a large range that I trade. Because without those large ranges, because you see all this price action here, it needs to be rebalanced. So I like to see if they actually, since they swept this liquidity, I like for them to go back up, revisit some of these levels, and let's have a good time at it, right? So we want to feel there. To the low. I like to see price at 432.75 to the range of 486 in this ballpark. Rebalance some of this price. Even 78% retracement not off the table, right? Because we did get a structural break here, right? But this was a bigger one. So any of these two candles is still on the table for them to rebalance. This one is not. So I wasn't worried about this candle per se. Let me get rid of this. I won't worry about this candle per se because of the simple fact it did not break no structure. All it did is stop shy of structure. If it would have broke structure, then that always a target. The candles that break structure are always the targets. So it broke structure here, and this one also, well, technically this candle also broke structure. This one just was a continuation of it, right? It got some of this structure. So any of these two candles are targets. This one is not because it didn't really do much versus these two candles that kind of power through price. So that means avoid buying and selling volume right here. So just straight sell action is do 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 do. The algorithm working overtime and it's also slipping. The key was they wanted to catch you into longs position because once you've seen it balance here, you'll say, oh man, that's the trend. It trended Monday, all the consolidation. We should get another trend back up. It's bullish to the high. We should be good. But what they did was they trapped you into price as buyers, and then they dumped the market on you once they see the orders got there. Because a lot of people are impatient, especially when you got a pullback. Pullback look action, you got that. So, right? But that's not the case, right? But yeah, I definitely would like to see price get rebalanced more than a 38% retracement. That's not enough. I like to see a 50%, 61% retracement before I consider going back into this market. Right. Now let's get over onto gold. Q. Let's get slimy. What up, Rod? See, you came in a little late. Happy to see you as always, my brother. All right. SOS on gold. I understand. I understand. It be like that sometimes, especially when you're important. Mm-hmm. Yep. Uh, Another thing I like to do too, like when price is really moving on the, MCs, stuff like that, but well, as far as the index funds like the NASDAQ and the S&P 500, I will go to the option market, take a nice little option trade. Nobody did. Get some great returns. Get a little weekly. Let that thing run for 100 something percent. Get a five of it. It's a Friday, Walmart price, like always. Oh, like I told you before, Friday was Friday, and so Friday. Monday roll up. Boom. We had this nice Monday high get put in. Like I told you, I like to sit back on Mondays and let it do what it do. I don't want to trade. I wanted to open a range, establish a range. Maybe on Tuesday. Shoot, let me look real quick. It's holding. It's holding. Let's see what they do right here. in this Asian market real quick. It's holding. A bull flag hold. All right. So I let the range get put in. Mark all that good stuff up. Where's my? Oh, here's my Monday low. Great. So we had the Monday low. We had a high. Boom. Closes red day. Right. Then low end. So from there, I'm watching price on Monday. I see what happened Tuesday. I'm watching price. I'm kind of stalking it out. I'm kind of like, all right, what y'all got going on? Go. What are you doing this week? How you living? Okay. Get that care package I sent over. Yes, I don't. Let's see the top. Right. Let's keep it smooth. So when I seen price action that morning, sweep down, take the low. I'll say, okay, so y'all took the low in the Asian market. Now, coming into the New York hour, we are not shifting back down. Matter of fact, we got a nice fair value gap got put in on the 1 hour chart, and that's what price is keying off of, right? So once I noticed that, I'm like, okay, great. Gold keying off of that. Let's see what it do. News pop up. It had to go off, right? So once they start getting that little reaction, I'm like, okay, great. We start running, but we're gonna drop down to the chart. I see they closing, they trading above the Monday close. New York closing price. That's the reason why I mark it up. As you see them trading above the New York close inside of a 1 hour fair value gap, price consolidation. And it's the trade I called out yesterday because it had the nice little double bottom. So my setup was I seen it here and I said, man, I don't know what the bottom is. I seen a block down there, but I'm like, I'm not sure when they're gonna come up here. I was looking to say, like, are you gonna continue breaking out? Because I seen them key off of this. I was like, all right, will this be a 3 order block continuation? Will they take out the wig and just simply push on, right? But I wasn't sure. So I just simply said, well, I'm just gonna wait. I set a limit order here, and my target was the high. I said that's smooth for me. That's all I need. So that's what I did. I set my limit order right above there and I waited because I didn't want to call a bottom. Last thing I want to do is get midway through this candle and they decide to keep going lower, right? Because if I say I wanted to play devil advocate, I wanted to get in midway through this candle, I don't know the low. My stop loss got to be below this pivot here because they cannot take this out because if I put it right there, they ain't enough. So I got to risk about 75 ticks, but I can say I can make 179 if we hit, right. So I got to figure out where is the bottom. Trying to call a bottom is always a bad thing per se because you don't know how much you got to risk to actually get that bottom. The upside is always great, but do you want to risk that much to get that upside? I only risked 30 ticks for this trade when I took it because I just simply waited. I set a limit order at the high and I'm just gonna catch them on the way out. I just walked away from it. I said, man, limit order. I'm just gonna wait. They hit it, cool. If not, whatever. I'm only risking 30 ticks. Not a big deal. They're not gonna kill an account. It'll be okay. Sit back and be patient. But trying to call it here, or let's say you're trying to take it there, well, you're still gonna risk this. You don't know how long they're gonna be. You don't know if they want to crash through this and continue low. You never know. I don't have a crystal ball, and I don't know who owns one. If they do, they probably got off of Temu and it don't work. So just stay smooth. Do what you can and how you can. All right. So I simply target the high because I did see the double bottom pattern set up, and it ain't a double bottom until it breaks out. Okay, and that's what it did. Did the break and close, whoop, whoop, and it went easy peasy. Trade over, done dollar. Now did gold start playing around? Yes, it did. It had a little continuation, but it still shifted up and got a little bit higher, right? And they're gonna bring me into my Wednesday play. Because seeing what gold did yesterday, that was a great trade. And I'm like, I looked at crude oil this morning, and from there, it was not doing nothing, right? I'll show you proof all that after this, but it was not doing anything I needed to do. It was just trash sauce. Uh, yeah, it was trash sauce. It was not giving no setups. It was tight consolidation, just playing inside of a range. If you don't really get a good range expansion, it's not worth trading. So I know, top sit on my hands, walk away from the market. So once again, mark Tuesday high. And this is what you want to see, especially trading, you getting a trading bias, right? So notice we didn't take out Friday low. I always like to pay attention to those lows that did not get taken out. And from there, I want to, keep my eye on it because if they do decide to come back, my target would have been a Friday low because they're going to want to take that. If the actual was going to shift down, they would have want to get that trade like nobody business. They would have wanted to get that real quick. So let's always keep that in mind. From there, market Tuesday closing price. Okay, so that's Tuesday closing price. Boom. So morning wake up, them boys going, right? I see them, they trucking along. I'm on my 12-minute chart, minding my business, standing on business. Okay. So I'm looking at it. I got all confluence, everything going up, right? So what I like to do is I go to a 4-hour chart. I'm looking at the setup. I'm like, okay, cool. RSI bullish trend, MACD bullish trend on 4-hour. I go down to the 1 hour. This being casual with this. I'm like, okay, cool. We bullish, right? But I said, we currently in a pullback right now. So we still on the bullish side of things, but let's just be careful, right? I'm just taking caution. I know we still in a high time frame. So I dropped down to the 12-minute. And from there, I started watching price. I was my bias was bullish on gold. And when I seen price kind of doing what it was doing, I was right here taking my initial trade. So we dropped down. What's a 3-minute chart I was on? With oscillators now. Let me go back. I'm gonna mark this out real quick. That way I can show you. Because this is where things got very interesting. Okay. Exit. Fall apart. Here, so let's get to the 3-minute chart. Right. So looking at it, I seen what price was doing. So I seen price take the high. Okay, great. Then also I seen price take this low, playing around with that low. They broke past, they wick past, didn't close, but they wick past it and then came up. So I said, all right, cool. They grabbed some liquidity, but they took the high first and then they ran for lows. But you got a pair of orders right there, right? So that's I think. So okay, we got a pair of orders sitting right there. That's fine. It's cool. So from there, I'm seeing them coming back up. I'm like, okay, I'm just gonna simply take me a quick trade. So as I'm watching price, but it's starting to struggle, right? It's struggling getting up there. I'm up about 20 ticks at the moment. I said, will it continue? I seen all that market shift on the 12-minute chart, bagging out, going back down, bagging out, coming back down. And I'm like, wait a second. I think I'm wrong, right? But I'm not crazy, so I simply readjusted my stop loss, right? I said, all right, cool, we up. We got about 12 ticks on the board. I said, let me move my stop loss in a profit. And then I said, well, let's play David Advocate real quick. Let's go ahead and run a fib from that high to the low. I said, okay, where are we at? Where are we currently sitting at in price? I said, well, we right here. Change that to stop loss. So I'm like, okay, we right here. We got a couple of ticks on the board here. We got a 3 order block continuation. Boom, boom, boom. I said around the 50 tick mark outside 50% retracement mark. I said, I said, well, I have trouble on my hands. if it start acting funny here. So I wind up tightening my stop loss up some more. Got about 10 ticks locked in. And from there, I was like, okay, if they decide to fail, I'm already got ticks locked in. It's no problem. I'm not going to lose money on this trade. So I'm just going to watch it. And sure enough, I was not tripping. I didn't make it up. They start, price start tripping, came down, boom, and price start rejecting. Hit my stop loss, I'm out the trade. So now I'm sitting here. I was like, huh. I said, well, that's a 60% retracement. Price rejected instead of continuing. Price took a significant level out. So what are we actually doing here? And from there, I made a quick decision. I said, well, let me flip it around real fast. I said, I'm going to flip it right in this ballpark. And we was right still at the 50% mark. I said, well, I said, I can go to the high. I said, my stop loss is at 32 ticks. I was at the high already. I said, what's 30 something ticks? I said, I've already got something locked in. I said, I'm smooth out here. There's nothing to worry about. And then from there, I said, well, I need 101. It was 101 ticks. That was right at the negative 27. I was on, Shantae actually called me at the time. We was on the phone chopping up. It was funny because I was shouting, talking about, man, we almost there. I'm almost out this thing. So I was like, all right. So we going in. And I said, boy, she said, you mess with that Glenda. I said, yeah, man, I had to go ahead and slide on that Glenda. Rod was been talking about it. I said, man, yeah, I said, Clarice acting up. I had to slide on Glenda this week, I had to go on ahead and get over there. Clarice is tripping, so I left, staying at Glenda's right now. It's nice over here. She cooking the good meals. Got that hot water cornbread out. You feel me? That hot water. Jalapenos in them. Yeah. So, I'm over here and it's smooth. I no look back. They didn't get the stop loss. I came back. I said, okay, cool. We up 80 ticks. I said, that's nice. We playing around the 70 mark, right? That's when things start getting funny. It started getting funny right here. I said, man. Y'all boys acting real fine. I said, let me go on here and lock in, son. I moved my stop loss right there. I'm like, I got like 20 locked in, 60 on the board. It's playing around between 70 ticks, 65, 70. I said, man, it's almost out of here. Let me go in there and tighten it up a little more. I said, if they get this pivot, they're about like 54 ticks locked in. I was like, okay, cool. It's right there. I ain't tripping on it. Then they went on and dumped. They hit my take profit. I said, congratulations. I pat myself on the back, do a little hoorah, and I'm about that thing. From there, they did their little fugazi stuff, and they continued dropping. But what I paid attention was like, well, I could be wrong. I didn't try to be hard fixed. I used my risk management to say, if I'm wrong, take my money, take me out. I'm not trying to be so rigid where I give up a large amount of wins because of simple fact my ego get in the way to say you're not wrong, leave your stop loss alone, sit back, kick your feet up, you move your stop loss, they may take you out, blah, blah, blah. I said, well, if they get this stop loss at this point here, I am wrong. I needed to exit. By admitting to the fact that you're wrong and knowing where you want to get in and out at, it will set you up in the long run for better victories. By simply not holding on to bad trades, bad opportunities, you can easily get out of these trades with some profits and either change your direction or live to fight another day. Now, looking at it, I don't know, I don't trade gold like that, but they did go up in their fees. I noticed to trade gold today, it was $6.12 a contract, right? So typically I lock in 2 ticks just to kind of hold a position. That way I can take my risk off the table and then I just let it run. I like to trail my profits. It typically take me 30 minutes of trade, sometime an hour, give or take, for a trade to go through to the profit targets I like anyway. If not, I'm wrong. It'll hit my take profit. It'll hit my break even anyway, and I can get out the trade. I don't care. I didn't lose no money. That's all I care about, right? So when I noticed the fees went up, because I check all that stuff, because this is a business, it's not a hobby, it's a business. I need to know how much it costs me to do business. At $6.12, you lock in one tick. Well, guess what? You're only making $3 and some change. You ain't even getting $4 out of this, right? And eventually, if you lost a trade, you got the loss plus the $6 taxing on to you. Now you got to ask yourself, like, okay, what if I'm scalping gold? Now the fees are starting to add up, right? You know what they say about a cup of coffee, what it can cost you in a year. Now imagine you keep going in and out of gold multiple times, right? Multiple times throughout a day, and you getting no results. All you getting is toe off the bone. You just getting ate up left and right, 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 left and right. And you steady saying, oh, I'm going to take 10 trades a day, right? Let's say you're taking 10 trades a day, which I don't think you should be doing. So that's 10 times 612. Boom, you're paying $61.20 in fees. All right. Let's say you do that come on, let's be for real now. I know y'all trade 6 days a week. That's $367 because I know y'all ain't stopping on Sunday. As soon as that Sunday roll around, y'all know y'all back. Don't count. So that's $367 a week times 4. That's $1,400 a month. I'm rounding down, by the way, because actually $1,468.80 a month, right? If you're not that profitable or you're not that consistent, that additional $1,000 in fees, that $1,400 in fees, yeah, you're gonna lose your account. If not that, you ain't gonna go nowhere. You're gonna be going backwards and forward. It's gonna be a constant ping pong action between you and your trades. You'll never grow your account. It'll wear you out, and then you'll be even trading for the brokers. So you got to get larger trades, and you got to trade less. The key is waiting for proper setups, A+ trades, and not taking the BS and going in and out the market all day long because they're gonna keep inflating the fees for no reason. That means you got to trade better. You have to make more money because you don't, you'll lose all your money to fees. It doesn't work. If you look at the long run, if you're only winning at a 50 to 54% win rate, that means you're losing and winning is not that much of a difference. You're just winning slightly more than you're losing, right? And if you're not locking in a 1-3 to a 1-10 trade, that means every loss, you're just doing a 1-1 or a 1-2, you're not too far from your loss. Your losses are compounding. Now, what doubles it up is the fees that are being taxed on to you, right? So you have one red week plus fees. Yeah, that's an additional $300 some dollars you're down on top of the losses you took in the market. Now you have to recover those losses plus the fees. And it's still, once again, even if you're winning, you still got to pay the fees. So it's going to take a little bit longer to work your way out of that hole. So you have to be more accurate. You have to trade less and be more intentional about how much you're locking in. If you keep your win rate at a high level and trade less, you don't have to worry about those fees and they're not going to be getting that much money off of you. So let's say you take 10, 20 trades to make $1,000 or $5,000 or whatever the heck you may make. Is it really worth it when the people in your pocket and the losses you incurred too on top of that? What are you sacrificing for these, shallow victories? You have to think about those. So try to focus on what am I giving up for these victories and how can I trade less but make more money when I do enter the market? Because when I enter the market, I try to make it count. I enter the market, the futures market 2 times a week. That's Wednesdays and Fridays. If I see something on a Tuesday and if I can't resist it, oh yeah, I'm getting that. But I need a 10x trade. If I don't see a 10x trade, I'm sitting on my hands. Right? A 10x trade will get me out of bed. If it's not a 10x trade, I'm not leaving my house for no scalp. I'm not leaving my house for no 1-3, a 1-4. I'm not leaving my house for that. I refuse. It's not worth my time and energy. I want 10x trades. If I don't see a 10x trade, I'm not rolling over. It's point blank period. Have some standards about yourself. Start taking better trades. You don't have a choice. If you keep playing this game, these brokers are going to wear you out. They showing you that. I got to go look at the cost of the other commodities because I know for the longest trading crude oil, I know this number off the top of my head is $4.64 per contract round trip. In and out, $4.64. So I calculate all of that in my profits for that week or my losses. When I do all my numbers, I look at all that like, okay, how much I paid in fees? Let me see if I can get this number down some more, right? Let me pay these people less as possible. I want to make these trades count, and I don't want to pay the broker that much. So I keep all that numbers in my head. So when I go trade something I'm not used to trading or I don't trade that often, I pay attention to the numbers because I know they can wear your account out. I know that's the fastest way to lose an account. Trust me, I seen the numbers. I seen them over and over. People like, oh man, I wasn't really that close. Well, you only counted the trades you took. You didn't count the fees that you paid. Still paying fees. That's taken away from your P&L. They don't tell you that when you go get those funded accounts. Because that also take away from your bottom line. Everything has overhead, just like your job has overhead, just like you have overhead with your bills and all other stuff. Your trading account do too as well. Nothing is free out here. I'm gonna enter the market for free. You ain't gonna leave the market for free. You must pay for everything. So on that note, that's my piece for the night. All right. So let's keep it smooth. I hope y'all, can enjoy this and get the point of this. I just want y'all to do better, live better, be better.